What if I told you that the real invention that made us rich wasn't money, wasn't credit, not even capitalism? It was light. A light so small, it could fit in your hand, but powerful enough to rewrite the way we work, live, and spend. Before electricity, the world went dark after sunset. But after Thomas Edison's bulb lit up the night, the economy never slept again. This is the story of how electricity didn't just light our homes. It electrified capitalism itself. In the early 1800s, before light bulbs and power grids, economic growth had a ceiling. Factories ran only when the sun was up. Streets were dark. Productivity was tied to daylight, literally. Candlelight and gas lamps existed, but they were expensive and dangerous. The average household spent nearly 5% of its income on light, a luxury today's world takes for granted. Finance itself was manual. Bankers working by candlelight, ledgers filled by hand. No 24-hour markets, no data, no speed. Economies moved as slowly as the oil that burned in lamps. But then came the spark. In 1879, Thomas Edison introduced something the world had never seen before: a reliable, commercially viable light bulb. But Edison wasn't just an inventor. He was a visionary capitalist. He didn't want to sell light bulbs. He wanted to sell light. To do that, he built the first electric utility company, the Edison Electric Light Company, and launched the Pearl Street Station in Manhattan in 1882. That tiny station powered 400 bulbs across a few city blocks. But in that small grid, a new financial system was born. Electricity created continuous productivity. Factories no longer stopped at dusk. Shops stayed open longer. Cities began to pulse with economic life 24/7. Every extra hour of light meant more work, more consumption, more money. Electricity didn't just make nights brighter, it made machines smarter. Before electricity, factories relied on steam engines and belts that powered everything from one central shaft. One breakdown could stop an entire production line. But with electricity, every machine could have its own motor. Independent, efficient, flexible. That changed everything. By 1910, industrial productivity in electrified factories was 5 times higher than in steam-powered ones. This led to mass production and the birth of consumer capitalism. Companies like General Electric, Ford, and Westinghouse weren't just building machines. They were building an ecosystem of spending. As productivity exploded, wages rose. But so did the desire for new things. Electric appliances entered homes: toasters, refrigerators, sewing machines, each one powered by the same invisible current and financed by a new idea: credit. Electricity had made work efficient. Now it was making debt desirable. Electricity gave rise to something beyond imagination, a consumer who could want more than they needed. To feed this hunger, banks and stores began offering installment credit. Buy now, pay later became the new electricity running through society. By the 1920s, over 70% of household appliances in America were bought on credit. It was the first electrified economy, not just powered by voltage, but by desire. And like all revolutions, it came with a cost. The same electricity that powered factories now powered markets. Ticker machines, electric telegraphs, and phones made stock trading nearly instant. The speed of finance increased, but human caution didn't. In 1929, that electric greed overloaded the system. When the market crashed, millions of lights went out. Not literally, but financially. Factories closed. The current of optimism died. For the first time, humanity saw the dark side of the current. Electricity could amplify wealth, but also amplify collapse. After the Great Depression and World War II, electricity rebuilt the world again. Power grids expanded, cities glowed. Every nation wanted to be electrified. By the 1950s, nearly every American household had at least one electric appliance. Advertising turned electric living into the symbol of progress. But while the public saw toasters and lights, corporations saw data. Electricity enabled computing, the next revolution. From mainframes to microchips, every financial system of the 20th century was built on one principle. If you could control the current, you could control the capital. Fast forward to today. Electricity doesn't just power factories, it powers algorithms. Nearly 80% of global trades are now executed by machines. Machines running on electric data centers, predicting, reacting, and moving capital at lightning speed. AI, blockchain, crypto, all are children of that same invention from 1879. And once again, productivity is soaring, and so is inequality. In 1900, electricity divided the illuminated from the dark. In 2025, data divides the connected from the disconnected. History doesn't repeat, but it does recharge. Innovation changes how we work before it changes why we work. Electricity promised convenience, but it demanded consumption. Every new technology rewires not just machines, but mindsets. Power always creates imbalance. In Edison's time, the electrified few controlled the rest. Today, the data-powered few, big tech, financial AI, are the new utility owners. Progress is not free. Every surge brings overload. Every current creates dependency. Our challenge is to manage the power before it manages us. Electricity began as a flicker of light in a lab and became the heartbeat of modern civilization. But here's the paradox. The more we plug in, the more we depend. The more we connect, the more fragile the system becomes. Edison gave us light, but it's up to us not to burn out. Because the next economic revolution won't start with a spark. It'll start with a signal. If you enjoyed this story, the forgotten link between innovation and money, subscribe to Financial Technician, where we don't just follow the market. We decode how technology builds empires and sometimes destroys them.